Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center, and we are your go-to mortgage broker in the Durham region. This is a weekly mortgage market update just to let you know what's going on in the mortgage market. So we know that the Bank of Canada has increased rates once again, and we also know that that's going to increase the rates on lines of credits as well as on variable rate mortgages. It also could have impact on how much people qualify for a mortgage. Just know that if you are looking for solutions to cash flow or ways to raise equity or raise cash, feel free to reach out. Sometimes there are ways that we can help with that. I also just wanted to kind of talk off the cuff a little bit about inflation, Bank of Canada, why the Bank of Canada is doing what they're doing. So they really want to stop inflation for the long term. They want to stop high inflation for the long term, because high inflation for the long term is more than just the cost of groceries going up and the cost of different goods and services. I'll give you an example. Let's just take a condominium building as an example. So a condominium building, has expenses to pay to keep the building in a good condition. And the one source of income of a condominium building is condo fees that unit owners have to pay, to keep upkeep of that building going. Now, when inflation is 6, 7, 8%, like it has been, the cost to maintain a building, for example, would be higher. And so the unit owners might have to increase the condo fees that they're paying each month as well. The issue, though, is that when we say inflation is 6, 7, 8%, as an example, that doesn't mean the cost of the building, of maintaining the building, has increased 6 or 7 or 8%. When we say inflation, that's overall inflation. But in reality, the cost of maintaining a building may have increased by 10%, 15%, 20% or more. And so the risk is that, if with high inflation, things like condo fees for millions of Canadians could go up quite a lot if inflation stays high for long. So it's that kind of situation that the Bank of Canada is, really cannot have, and that's why they're being so aggressive on these rate increases. Inflation for the long term, it does not bode well for any economy or any country. And the very worst case scenario is when you have people in a society that perhaps can't afford basic items, and they start to lose trust in the financial system. That's really dangerous to the Bank of Canada. So the Bank of Canada would much rather a recession versus inflation for the long term for those reasons. And because the Bank of Canada can fix a recession much easier. If a recession is happening, the Bank of Canada can always decrease rates to spur the economy back on. So that's just a little bit of insight on inflation, why the Bank of Canada is doing what they're doing. And like I say, though, if you have any questions, feel free to reach out, and we'd be happy to help.